cap rates versus the Treasury yield. And so as a valuation expert, how much stock do you put into that chart?
There's pretty much alignment around is it's not a 1-to-1 ratio, in terms of those spreads, interest rates, the impact on, on cap rates. But I do think what I like to look at is kind of that long-term average and use it as somewhat of a gauge on sensitivity. So, for example, your average spread, or I guess the second quarter spread on cap rates versus the Treasury, again, Q2 around 135 basis points, right? If you go back 10 years, 283 basis point spread, 5 years, 236 basis point spread. So, right now that spread's a lot tighter than it's been in a while. So, I think there's a few different ways you could interpret that as number one. I mean, it's pretty tight, so it's hard to find yield. We know that a lot of deals were getting done with negative leverage. I think that's kind of worked its way through as well for the most part. But if you look at it and you say, okay, property market fundamentals are going to stay level, right? They are what they are. Then I would say we're probably going to see some more upward pressure on cap rates, right? And that's going to normalize back out close to that 230, 250 basis point spread.